Okay, welcome to video number 2. So here we will be doing steps 4, 5, and 6. So we have just finished our regular journal entries, posting those and doing our unadjusted trial balance. So now we are ready to make our adjusting journal entries. All right, so we just have 2. So we're going to journalize our adjusting journal entries, and we're going to do that on adjusting journal page 2. Okay. So journal entries that are adjusting are typically at the end of the month, and they're January 31st. And it says that we accrued salaries of $500. So the word accrued means that it has happened. That means that our employees have worked, but cash has not changed hands. That means that we have not yet paid them. So we need to set up a liability. So we're going to have sales, salary expense, and salary payable. And this is for $500. All right, the second one says depreciation. So we recorded depreciation. So we debit depreciation expense and we credit accumulated depreciation, which is a contra asset account, and that is for $1,000. Okay, so once we have made our adjusting journal entries, we're going to post those to the ledger. So I'm going to open those up over here so I can see my journal. Here they are that I just made, and I'm going to go to my ledger so that I can post those. Okay, so picking back up on my same ledger. So sales salary expense is debited for $500. So sales salary expense on January 31st, this time from page 2, got debited for $500. A debit and a debit. I add, so my balance is $2,500. That went to account number 502. All right, salary payable is a liability. So on January 31st, I credited it for $500, so my balance is $500, and I went to account number 200. My depreciation expense is an expense, and so on January the 31st, from page 2, I debited it for $1,000, so my balance is $1,000. That went to account number 504. All right, accumulated depreciation. It's contra asset, so it's up here with the assets. On January 31st, from page 2, I credited it for $1,000, so the balance is $1,000. So that went to account number 112. All right, so I've journalized and posted. Anytime that you post, you must make sure that this ledger is in balance. So I'm going to look at my ledger right here, and I'm going to put it into the trial balance to make sure that I'm in balance. So now I'm working on my adjusted trial balance because I've just made my adjustments. All right, so now I'm looking at the same ledger that I looked at before, but things have been added to it. So I need to make sure everything's still in balance. So my cash, $20,500. My merchandise inventory, $29,500. My equipment, $6,000. My accumulated depreciation is a credit of $1,000. My salary payable is a credit of $500. My Toby capital is a credit of $40,000. My next account that has a balance is sales of $36,000. Cost of goods sold, $13,000. Utility expense, $1,000. Salary expense, $2,500. Rent expense, $4,000, and depreciation expense, $1,000. We are going to sum up the debits, and then we are going to sum the credits, add together the credits, and we're going to hope that they equal, and they do. So we are in balance. All right, the next step over here tells us that after we make our adjustments, we need to prepare the financial statements. All right, so remember, we make adjustments to get everything ready to prepare our financial statements. So here we go with our financial statements. The easiest way to do this is to look at your adjusted trial balance and put them into your financial statements. So our income statement is always just revenues minus expenses. So that means that we are looking at these items right here for our income statement. Okay, we're going to drop them in. These are not debits and credits. Remember, these are subtotals and totals. So sales is already a total, so I'm going to put it over here. as is my cost of goods sold, because I don't have to calculate it. I already know what it is. Gross margin is sales minus cost of goods sold. So gross margin is $23,000. Next, I'm going to be looking for my operating expenses, and that's made up of my selling expenses and my general and administrative. So these do need to be subtotaled. So my sales salaries expense is $2,500. My depreciation expense is $1,000. My rent expense is $4,000. So my total selling expense are these three items together. All right, general administrative expenses, I just have one, but I'm going to go ahead and put it here to be the same as the way I did the others. So utility expense is $1,000. So my total general administrative is $1,000. So my total operating expenses is made up of total selling, $7,500, plus total general administrative of $1,000. So my net income is gross margin minus these expenses, $14,500. Statement of owner's equity. This was a new company, so we started off with zero. We had an owner of investment of $40,000. We had net income, remember it always comes from right here, $14,500. So my ending capital is going to be equal to $54,500. All right, I don't know why that says statement of owner's equity. This is a balance sheet. All right, balance sheet is going to be cash. All right, so my balance sheet information, we'll make that green. Balance sheet is assets, liabilities, and owner's equity. All right, so we've got cash of $20,500, merchandise inventory of $29,500, equipment of $6,000. Accumulated depreciation is a negative $1,000. Remember, these are not debits and credits. Accumulated depreciation, just you subtract less accumulated depreciation. I will sum or net those, and I get $55,000. Salaries payable is $500, and capital always comes from up here. Okay, so I'm going to unhighlight this because that might make an impact and help somebody else remember that my capital comes from here. I'll make this number green. That way you can have a visual. All right, so my ending capital that belongs here goes there. And then total liabilities plus capital is 500 plus 54,500. So I check to see that I'm in balance, and I am. So that is great news. So let me know if you have any questions. There'll be a third video for the last part.